analysis. Please don't forget to like, subscribe and share this video with your fellow trading colleagues if you find the information I provide every week useful. And so let's get into the week ahead. You can find it on tradingeconomics.com. It's this box here, came out 43 hours ago, January the 16th. And the week ahead, zoom in a little bit. So it talks about the in the US, the spotlight will be taken by retail sales, producer price inflation. That will be definitely keenly watched. Several housing indicators and earning reports for several big corporations. Also, fresh inflation data will be released for the UK, Japan, Canada as well. That's definitely going to be an indication as to what the central bank are likely to do with interest rates, and monetary policy meetings will be held in Japan. That's a big one, and that's pretty much the currencies that we trade. Finally, investors will be waiting for the fourth quarter GDP growth, industrial production and retail sales for China, as that sets the pace for how soon global growth will return, which will affect a lot of currencies in different ways. So getting on to some more in-depth fundamentals and technicals, and starting off on the dollar index. And the dollar index from last week, we were talking about this being an area, a significant area, and really a kind of a turning point fundamentally as to whether price was likely to bounce off of this demand zone or continue falling. If you remember last week, if you go back to last week's video, and basically prices fell, and the reason why was not because we're in some sort of Elliott wave, wave 2 or wave 3 or wave 4 nonsense. It's really because of fundamental analysis and understanding that value for an exchange rate and a currency is derived from fundamental analysis, not price action. Price follows the fundamentals. And so bond investors, right, who are the smartest investors on the planet, some of the smartest investors, because they have to really look ahead. They have to look into the future to decide why they're buying 2-year, 10-year, 20-year treasury bonds or gilts. These guys are have got the money, they're buying government debt, and basically bond investors are at crossroads with Fed pause in sight. So inflation trend sparks bets that rate increases will end in March. So open interest in treasury note futures swells in rally. And so the emerging consensus that the Federal Reserve will raise rates only 1 or 2 more times has ushered in a new set of dilemmas for bond investors, who now must decide which parts of the market will fare best under the circumstances. And ultimately, again, we were talking about this last week, and we've been talking about this for the last few weeks. And obviously, I've been had a buy bias on the dollar, and I've actually changed my bias on the dollar, but I'll get into that in a sec. But if you want to understand why I changed my bias, or I've changed my bias recently, and understand really about inflation and how it affects interest rates as well as GDP, I have some webinars on my channel. If you go to the search and type in webinar, right, the top two, or these two videos should come up. Fundamental analysis webinar and how to forecast huge trends using Forex fundamental analysis, my most recent webinar. Watch those, and that will give you a real solid foundation as to how to really kind of predict large trends in the Forex market, or why you should change your bias. Really, you're changing your bias on currencies, and we're changing our bias on currencies maybe once, twice a year maximum, right? On the dollar, I've been short on the euro dollar, but I've been short on the euro dollar, yes, but long dollar for nearly 2 years, right? That's the only bias I've had fundamentally. And you can look back on the euro dollar chart over the past year and a half, nearly 2 years, and you'll see the massive downtrend. And so if you watch those two, that give you a solid foundational understanding. And talking about now my long dollar bias, in our private Discord members group, on the, I think it must have been the Wednesday, when we have our weekly private meeting for the group, I was talking about the was talking to a couple of the guys who were, and I was saying that we're in interesting times, and you definitely want to watch the recording because Dr. Ninja couldn't make the Wednesday live call, and I said lots to go over. I said I'll give you a sneak peek. I'm going long on the euro now, and there was a lot of minds being blown, right? Because you know the guys in the group have known that we've been long dollars for so long. You know, a change in the bias, you know, can be, you know, a bit of a change, right? If you get used to buying something, but again, we have to be you know, flexible in our thinking. And so I'm going to release as well a trading video, or Wednesday's call, matter of fact, the 11th of January. And again, this is a private call, which is for private members only. I'm going to release this video, or parts of this video, to really kind of show you in depth what I was talking about with the guys. And this is analysis that really is just exclusive for the guys in the group. And this is just one of the training pages. As you can see, I've got you know, hundreds and hundreds of videos going back, you know, 3-4 years probably, if you remember. And in this I will explain and I break down to the guys you know, why the euro is now a long, and also as well things like hindsight bias, etc. And so if you do want to be a member of the Trading 180 group when it opens, I am opening up the enrollment in 21 days, the 6th of February. And I'll only do it for about a week, so I'll do it from the 6th to the 10th, which is, you know, Monday to Friday, and it'll be your opportunity, if you're looking to join, to really kind of learn the fundamental analysis. A lot of people tend to, you know, look at, you know, just price action to predict price, and really you're flying, you know, blind, really, and it's just a game of luck if you're just using, you know, price action. You want all the probabilities in your favor, and smart money use fundamentals, so why wouldn't you, right? Why wouldn't you use fundamentals? And also as well, just one of the things that you get access to is a fundamental analysis spreadsheet. So this is our spreadsheet that we use to decide on whether we want to go long or short. This is my bias that I provide for the traders, you know, whether I'm long or short or neutral, right? Because not every pair is to be traded. So this is my watch list of pairs as well, when you get access to all of this and understand, you know, really why we're going long or short on pairs, or why we're not even trading pairs, right? And that is the guidance that you'll get by joining the mentoring group. So heading back to the dollar index, my bias is now short, right? My bias is now short on the dollar. And that again was due to really inflation coming in, you know, lower than expected. Again, a bit of a trend when it comes to inflation. That's not to say that the dollar won't pull back at some point. Of course it will, but I think the market now is accepting the fact that we're probably likely to go a bit lower on the dollar. So any pullbacks on the dollar are probably shorting opportunities. Also as well, inflation is still to be watched, because in fact, if inflation still does tick to the upside, right, if it still does go higher, CPI, core inflation, then in fact, and it's seen as trending higher, then potentially the knock-on effect of that would be, you know, Fed will continue to hike rates, and then we could get, or hike rates increase their rate hikes, and we could see, in fact, the dollar still, you know, kind of pull back a little bit more than anticipated. But these are really the zones I'm looking at in terms of, you know, just dollar index, looking at dollar index, and I think probably the 105s are going to be a really, or 104 is going to be a really nice confluence for short trades on that dollar, on, you know, pairs like the dollar yen, dollar Swiss, dollar CAD, etc. So that's really my bias for now, for the foreseeable future, at least for the next quarter or so. But again, it is data dependent. Moving on to the dollar yen, and again, dollar yen, I am actually long on the yen, got in on that pound yen trade. I was telling you guys last week, kind of broke down a few videos last week, and in fact, if I go to, again, my home channel, right, and if you go to the videos section, and it was really broke it down as far as our bank short the pound in 2023, and also will the Bank of Japan cause a 1,000 pip move, sorry, on the yen, right? So pound yen, that was the trade idea, and if you go to the pound yen, you'll see what happened this week, and I got in right at the top, and as well as many of the group members as well. But we're talking about the dollar yen. And this is really now where the supply zone is. Again, I think with the yen dollar weakening, the yen looking to strengthen, in fact, yield curve control, monetary policy changes on the horizon, the potential for one, then we have, this scenario, which is probably the one that I'm looking towards. And then if you are looking to get long on the dollar, right, then the next demand zone is going to be right at the 127s. In fact, there's calls for the dollar yen to actually this year reach the 120s. So if you think about where we are, 127s, that's at least about another 700 pips of movement to the downside potentially, that we could go. It's not going to be necessarily a straight move all the way down, of course. Lower highs, lower lows, even higher highs, higher lows within that lower highs, lower lows. And so let's see what happens. Just about looking at the right opportunities. Dollar Swiss, again, not really a pair, but not really a pair that I'm looking to trade, to be fair. But we do have prices that now come down into this lower demand zone. Again, I think from a technical analysis perspective, it's probably you're looking at buy trades there, or you're looking at probably sell trades around that 94.50 or fresher areas of supply around the 95 zone. Not looking to buy the dollar or the Swiss dollar CAD, again with the dollar being weak and potential for zero COVID policy helping commodity currencies. Now we're looking at these areas of supply. If we're looking to buy the commodity currencies against the dollar, this isn't really a pair that I am looking to get interested in, but there's reasons why you probably could get interested in this, buying the Canadian dollar. I think for me, a deeper pullback would be the 137s would be probably the best area to look for any kind of short trades. If you're looking at short trades and buying a CAD over the dollar, if you're looking to buy the dollar, then maybe from now down into the 132s before looking at getting long, and possibly even down to the 131s before potentially getting long. Right there. Moving on to the New Zealand dollar, US dollar, and so we did again from last week, drawing out the zones. Prices did actually come back down into this area, the one 0.62 near the round number. It was 61, sorry. It did actually go beyond the 62 area, and then we kind of bounced off of there, and that was obviously driven by CPI. So again, if you do want to get long and buy the New Zealand dollar on against the US dollar, then you're looking for deeper pullbacks into the 0.62 area, maybe 0.61, 90s, 80s, to look for long trades. If you are looking for short trades, I would suggest probably looking at, again, the higher zone, this above the 50s for any kind of short trades if you're buying the US dollar. The pound is a very interesting one. So again, we've got some dollar weakness, but we've also had a bit of pound good news. I am still short on this pound, but I think they may avoid a technical recession. Data came out for GDP, which was better than expected, and it says what recession UK consumers and business signal optimism. So card spending data and investment intentions remain resilient. Stronger demand could keep up pressure on the Bank of England to continue to hike. And so Britain is weathering the worst of the cost of living squeeze in memory, better than indicated by dire projections for a catastrophic recession. And so recent data, recent warm weather has come out, and I think there was an article. I think it was on. It wasn't. I must have closed it, but basically, it was talking about the World Cup being a marker of. Let me see if I can find it. 1 second. Nah, I think I must have closed it. Anyways, it's talking about the World Cup boosting, World Cup spending, drinking, going to the pub, etc. Boosting spending and public spending, boosting or retail spending, boosting the GDP, right, and helping to keep GDP. So warm weather, some decent GDP numbers that came out, and so maybe the UK isn't as bad as first thought, but I still think they're probably the worst one of the worst anyway of the currency. So I'm going to continue shorting the pound, but now I have to kind of adjust my downside targets because it might not fall as far as expected. So with that being said, the pound really hasn't moved that much against the dollar, considering the dollar weakness since CPI. So there is actually, I think, an opportunity to go short on that pound up at the 124s. I think that's actually a decent opportunity. If I'm buying the dollar against anything, it will be against the British pound. So that's where I stand. If you're looking for any kind of buy trades, then and buying the pound against the dollar, then you're looking at a pullback into that zone there. And in fact, there is demand zone right here. Right, demand. Yep. And so any kind of pullback into this area here, I think is decent. Well, the lower end, I would say, is definitely the best area. The 119s, 118s, 60s, I think, are probably the best area to look for any kind of long trades if it can pull back. Euro dollar. So euro dollar, again, the switching bias after a good 2 years of going short, right? So we're in 2023. We were short from, I think, around February 2021. So we've been short all this time. On the euro, or had a short bias at least, and just really been buying on lower highs and lower lows. That's all we've been doing. And now it's time for a long bias on the dollar for now. Long bias on the euro for now. And one of the triggers was, when I saw this, was that Goldman no longer sees euro area recession as it lifts outlook. So region's economy is now expected to expand 0.6 in 2023. ECB still predicted to raise deposit rates to 3.25 by May. And so because they're not heading into a recession anymore, and the US isn't doing as great in terms of hiking rates, and they're looking to end their hiking cycle sooner. Again, you see Goldman Sachs now says the euro area will avoid a recession, and this is what the new data is pretty much pointing to. So the new forecast is for actually better growth now. So rather than Q1 being in a contraction, now you've got actually growth going on. So for me, the euro is a buy for the foreseeable future. Of course, if the data supports that, then great, right? So for me, I'm looking at pullbacks into demand zones of some sort. Again, this is not financial advice, just telling you what I'm doing and what the group are likely to do. And so any kind of deeper pullbacks, no one knows whether it's going to reverse there or there or there. But the point is that the bias for me anyway, my bias is now to go long on the euro for the foreseeable future. And so again, hopefully, if the data plays out, then that's going to be a very lucrative trade idea. And so also as well, we have euro rally may have more room to run as ECB takes hawkish baton from the Fed. So single currency set for best week against the dollar since November, and ECB hawks mild weather, and China reopening bullish case, build bullish case. So again, 120s, if that's one of the targets, that's at least we've got about 1,000, 1,200, 1,100 pips to the upside, right? So that's way somewhere up here if this prediction does come true. Lots of upside potential. Again, no one knows whether it will, whether it won't, but ultimately if that does come true, and there's obviously a case supporting that, then this is how you predict long-term trends. Again, it's not some silly Elliott wave deciding where price is going to go. It's the smart money who look at fundamental analysis and determine the value of a currency. So that's where we are with the euro dollar. Again, any kind of short trade you're probably looking at now, but for me, my bias is to the long side. Aussie dollar, again, for the if I'm shorting the dollar as well, one of the commodity currencies that's top of my list is to buy the Australian dollar. I really am looking getting bullish on this. So any pullbacks into demand zones for me are going to be buying opportunities. You've got you've got stack of really a big stack of demand zones, and it's not necessarily the nicest thing to draw such a wide zone, but how you would kind of break that up, one of the ways you kind of break it up is to look for any kind of support and resistance, major levels of support and resistance within that zone, and that looks like there's one of them right there, somewhere around there where you've got areas of support and resistance. So I do think that coming down to that 67.50s is going to be quite nice, or even lower if there's a if prices do pull back and do a deep pullback or give us a deep pullback, then I think anywhere around there is going to be quite nice as well. 66 areas, and this is really driven by the world global growth reopening, Australia being a beneficiary, one of the major beneficiaries of China reopening, right? Aussie yen, a tricky one, a very tricky one when it comes to trading. It's not on my list of things to trade anymore, and but if you are looking to trade this, I think if the yen and the Bank of Japan are going to change their monetary policy, I think that's going to be really the driving factor with the Aussie yen. So if I had to choose a bias, it would be to the downside. You can see again, fresh area of supply, prices came up, and really a really nice trade if you were looking to trade that technically. I think if you are looking at getting short here, it's not necessarily the best trade to get short, or best area, because first touches of supply or demand zones are really the best times to get long or short. You can see here there was a demand zone, of course, and then prices came back, and then price went to the upside, prices went back, came to the downside, right? So this is where value establishes itself, first touches. And so for me, if you are looking at getting long or short, again, just be cautious that these areas have been touched several times or once already, so it's the weaker it becomes. So probably looking for higher levels for long or short trades, but again, personally, I'm not really interested in the Aussie yen for now. Of course, if you're going long, that 85 would be the definitely a nice fresh area of demand, but you have to really be bullish on that Australian dollar and really bearish on that Japanese yen. And finally, the gold, right? So gold is again just benefited from dollar weakness and is likely to continue to benefit from dollar devaluation, and the Fed not hiking as much, although inflation is coming down. I think there's probably talks of recession as well. And so the recession talk, although I do think that other economies are like to go into a recession first, the recession talk seems to be hitting the dollar a lot more than others, and we've just seen that again. The euro is less likely to actually enter into a recession. So in fact, that benefits the dollar. It benefits the euro over the dollar, and but gold, I think personally, just from a risk perspective, central banks have been buying gold for in record numbers for a while now. So for me, again, I'm just looking for pullbacks, not necessarily looking to trade gold, just buying gold as an investment. I've been doing that for a while now anyway. So any pullbacks into these areas for me are gold buying opportunities. That's not be my bias, but if you're looking to trade these areas, then yeah, these are the zones that you're looking at getting long. Anyways, guys, that's it for this week. Hope you enjoyed it, and thanks for all of your messages. I will release again.
But if I lay down and I play dead,